What is going on, ladies and gentlemen? Welcome to another episode of Let's Talk Crypto. Good morning, good afternoon, good evening, depending where you are in the world. I am so glad that you guys are tuning in today. Happy New Year's to everybody. It is the 2nd of January, 2024, our first official live stream this year. Very excited about everything that's going on, and very excited for this year. This is the bull run, guys. The bull run is coming. We're basically in it already, and yeah, guys, it's crazy. This is what we've been waiting for over the last 2 years. So hopefully, like me, you guys have been accumulating. We did a ton of videos, a ton of content covering different cryptos and different things that you could have been doing to accumulate over the bear market. The bear market is pretty boring, right? And when it's boring, when there's fear, that's the time to build. That's where you build your wealth. You don't build your wealth in the bull market, but you build your wealth by buying during the bear market when nobody else wants to touch the stuff, when they're at their bottom, when everybody's afraid. That's where you build your wealth, because that's where you accumulate at the lowest prices, so that once the bull market comes around, you're already set up. You don't have to worry about anything, and that's how you create that wealth. So hopefully over the last 2 years, you guys have been building with me. We've done so many different things, creating content around this, trying to get that message out there. So hopefully you guys were able to do that with me. So as you can see, I'm very, very excited for 2024, guys. Let me see who's in here. I see 300 Rivers is in here. Happy New Year, Jay. Here comes the moment we've been waiting for a long time. Yes, 100% Rivers. It's been a long time coming, man. It's been a long time. We have Giannis in here. Hello, Happy New Year. Happy New Year to you as well. Yeah, man, we're so excited, guys. There's so much. We have so much coming that we're doing on our end, as well as so much that's going to be happening this year in crypto. So we're super excited and can't wait to see how things turn out. And we're not gonna have to wait much, because we're starting off the year with a bang, guys. Right off the rip, the 10th of this month is when the Bitcoin spot ETF approvals are supposed to happen. So expect a lot of volatility leading up to that date. So right now we're about almost a week away. We're 8 days away from the 10th. Expect a lot of volatility throughout this time. So I wouldn't be surprised if we potentially run up to 50K over the next week or so as things build up, right? We've already seen commercials for Bitcoin spot ETFs. A few different companies have already put out commercials. So why are they creating commercials if they don't have some sort of inside scoop that these things are going to get approved? So I know a lot of people have been saying that it could be a sell the news type of event, that maybe it's already priced in. And I mean, I've given that some thought too. That of course can always be a scenario, but I really don't think so. And the reason why is because I feel like there's still a lot of money parked outside waiting to come in. So I feel like there's a lot of people that are kind of waiting, right? They're waiting on the sidelines. They're like, all right, if this gets approved, then we're gonna put our money into it. So I think that's gonna be one of those things that just a ton of money is gonna flow in once that gets approved. And we saw what happened last time. Last time, just on the rumor of approval, Bitcoin jumped like $5,000-$6,000. I think on the day of approval, I wouldn't be surprised if we saw something similar. Right now, we're currently at 45,000. I wouldn't be surprised to see if we stick around this range. I would say a range that we could stay around is probably between $45,000 to $48,000 in the next week, leading up to that approval. If we get the approval, I wouldn't be surprised to see Bitcoin go up above $50,000. So if we're at 45,000 at this exact price by the time the approval date comes, I wouldn't be surprised for Bitcoin to go from 45 to 50 and get in that range, right? If we stay between 45 and 48, let's say we're on the higher end towards 48, I wouldn't be surprised if Bitcoin broke above 50,000 and then we kind of consolidated within that $50,000 range for the probably for the next few months as we lead up to the Bitcoin halving. So that's kind of where my mind's at overall. Now, of course, there is a scenario where it doesn't get approved, right? And it gets pushed back yet again, which is what happened last time and what's been happening over the last few years. Now, in that scenario, I would say that Bitcoin is going to drop probably about $5,000. So the same way that it might go up 5 grand on approval, it could drop 5 grand if it doesn't get approved. So that is a scenario that we also have to prepare for. We got to be ready for it, and we'll have to have it in the back of our minds that it could happen. So if we're sitting at 45, let's say it gets pushed back, I could see prices drop from 45 to 40. If we're at 40, at 48, I could see prices drop from 48 back to like 42 and 41, 40, right? So we do have those. You do have to have that in the back of your mind that could be a possibility. That is a scenario that could happen. But overall, I think from everything that we've been getting, as far as information, it seems like it's gonna get approved. So we're gonna have to either way wait and see what happens. So just don't position yourself against an approval. That's, I think, the main thing to focus on there. All right, so that's the main thing. I wanted to touch on that right off the rip because that's the main thing that we're going to be seeing right away, right? However, we do have some things before that this week. Let's take a look at what's on the economic calendar. So really quickly, what we're gonna do today on today's live stream is to break it down. Every single week on Mondays, well, usually the beginning of the week, sometimes Mondays, sometimes Tuesdays, I do a complete breakdown and analysis basically on Bitcoin and the overall market for Bitcoin, right? So basically what I'm looking for, we're going to be looking at, we're going to start off with the economic calendar. So we're going to see what's on the calendar for this week. Then we're going to look at the DXY, which is, of course, the dollar index, to see where that's at. Because remember, that correlates directly with Bitcoin as Bitcoin trades against it. So we're going to take a look at that. And then we're going to dive into a Bitcoin analysis. Starting off, we're going to do a top-down analysis, starting off with the monthly time frame, going down into the weekly time frame, and into the daily time frame. And in each of those time frames, we're going to be looking at a few different things. We're going to look at support and resistance levels. We're going to look for chart patterns. We're going to look for liquidity levels, imbalances, and wick fills. And then also we'll look for trade entries, potential trade setups for each of those time frames. The bigger time frames, those trade setups are going to be for the, to buy and hold type of thing. And then a smaller time frame on the daily, we'll look for some day trades, swing trades, scalp opportunities. So it's basically what we're going to be looking at. Let's go ahead and swap over to my screen here. And give me a second, guys. Let me grab a drink of water. I forgot to grab some water. So I want to grab a drink of water. However, we're going to start off with the economic calendar here. So this is basically what's coming up here in the next this week. The main thing that we're going to be focusing on for this week is the FOMC minutes. So give me a second. I'll be about 30 seconds. Let me grab my cup of water real quick. All right, guys, I am back. So, this week, the main thing that we have here on the economic calendar, and this is something that I look over every single week. I recommend you guys to do the same. You want to know what's going on throughout the week, so that you're prepared for any potential volatility that's going to be coming in. So you can see that this week, the biggest thing, although these can have some, smaller effects, this is the biggest thing this week. So FOMC minutes. And what the FOMC minutes is, it's basically a detailed record of the Federal Open Market Committee, that's FOMC, their meetings, and they're released basically 3 weeks after the meeting, right? So the minutes, what it offers is more concise insights on the monetary policy stances of all the members. So this gives us a better idea as to when and how many rate cuts we can expect this year. So it could definitely bring some volatility into the market depending on what is in the report, in the minutes, right? So that's why it's important. It's an important event this week because potentially, depending what this says as far as the rate cuts that we're expecting this year, it could bring volatility. So that's something that we're going to be looking at. And that's pretty much it for this week. However, on the 11th, next week is going to be wild. I'm telling you guys right now. On the 10th, we have the spot Bitcoin ETF approvals, potential approvals. Then on the 11th, we have the inflation reports. So next week is going to be a wild week, guys. So prepare for that. And as you can see, as far as rate cuts, we're expecting, once again, in January here, we have on the end of this month, the Fed rate decision. They're expecting another pause. And then in March, the market is expecting the first rate cut. So you can see 70% here as of today. Now this is going to change, I guarantee it, when the FOMC minutes report comes out, because it's going to give us probably a little bit more clarity on where we're at. So we'll see how that looks once that happens. But yeah, right now market is anticipating its first rate cut by March of this year. So in 2 months away, basically, right? So that's pretty much where we're at. So now the next thing that we're going to look at is the DXY. So the DXY is the dollar index, basically. And we like to follow this because it correlates directly with Bitcoin, since Bitcoin, of course, trades against it. So let's take a look at what's been happening here. This is the weekly time frame, so each candle represents an entire week. And we can see during this run up here, Bitcoin actually dropped a lot. And then when we got up here, if we just kind of took a look back, we could see that this was a big resistance, also a big support. So when we were here, we were speaking about, potentially this dropping back down to the bottom of the range. And that's exactly what's happened here over the last few months. As Bitcoin has been going up, the dollar index has been going down. So that is no coincidence. So here now we're at this support. So now we got to watch to see what happens here, because is it going to hold here or will it potentially drop lower? Now that's a possibility, especially once the rate cuts begin. Right? So I wouldn't be surprised if we broke below this and potentially started dropping down to these levels once the rate cuts begin. So not right now, but with time, we could potentially see this go lower and see what happens from there. But that's kind of what we're watching right now. Now, that covers basically the economic calendar and the dollar index for the week. So let's jump into the Bitcoin analysis. And for the Bitcoin analysis, we always begin, of course, with the monthly. I want to actually take a look first here at the dominance. As you can see, this is usually what happens in the beginning of the bull run. You'll see Bitcoin dominance go up, And you can see last time in 2021, it went up as high as around 72%, and then dropped down as low as 39, right? 38%. Now we're currently sitting at 52%. I wouldn't be surprised as Bitcoin got stronger. If we get a Bitcoin that approval on the 10th, expect this to run up, definitely. So when this runs up, that means that Bitcoin is outperforming the altcoins. So that's why I always kind of like to look at this to see where we're at as far as Bitcoin versus altcoins. Right now, Bitcoin is dominating the market by 52%. And remember the market cycle, right? Money goes from fiat into Bitcoin. As Bitcoin goes up, Bitcoin dominance goes up, and then it flows from Bitcoin into altcoins. So just something to keep in mind there as we progress here over the next few weeks and the next few months. So let's jump in here to the Bitcoin analysis, and we're gonna first begin with support and resistance. Let me take a sip of water here real quick. Yeah, guys, make sure to hit that like button if you enjoy what you're watching. If you get any value whatsoever out of this video, don't forget to hit that like button. Don't forget to subscribe to the channel. Helps us a ton. We plan on doing so much in 2024. We're going to be just doing some crazy stuff, guys. We have some crazy content planned. We have we're going to be dropping our video tutorial on selling options for passive income soon. We're working on it right now. I hopefully want to have it ready for this week. So make sure, guys, to subscribe to the channel and to smash that like button. It helps us a ton. It helps support the channel a ton. So I appreciate you guys. So looking at the monthly here, we can see right away that we're at a main resistance level here. So this goes from anywhere between 45,000 all the way up to about 48,000. Not only that, but if you go up a little bit higher, we hit 50,000. So basically the next $5,000 is a big resistance level for Bitcoin. Let me see the volume shelf here, what that looks like here. And on the volume shelf, it shows the same story. You can see this massive volume shelf here at the exact level where that resistance is, right? So yeah, expect a lot of resistance here. We're not just gonna fly through that, right? However, that's from a technical standpoint, right? Now, if we have a catalyst, because a catalyst is usually what's needed in order to break through such a thick resistance, if we have a catalyst, then we can run right through that resistance. And that's what we have coming up. So even though we're at a big resistance level right now, we might break right through it with a catalyst, which is the Bitcoin spot ETF approval. So with that approval, I think that we break into that $50,000, maybe not break above it, but at least hit it, potentially drop back down and consolidate between somewhere around $50,000 is kind of what I'm thinking. So yeah, that's pretty much what we're going to be watching for these next 2 weeks as we get closer to that approval. Now, as far as support, we already know that one of the big supports that we had here was the previous resistance, which was right around here. That's $44,000. You can bet that that's gonna play as a support area, and basically every whole number below that is a big support area, right? Now the biggest two are of course $42,000 and $40,000. $42,000 because it was a previous all-time high, so there's a lot of orders there, a lot of bids there. And 40,000, big even number, big whole number. And historically a big support and resistance level. So those are going to be the two biggest supports to the downside. Now 45,000 is also a big support. And we've been speaking about once we broke above 40 and 42, we were like, all right, we're probably going to range between 40 to 45. And that's exactly what we did last month, right? We range because we broke above that in early December. And for the rest of the month, we just consolidated between 40 to 45. Now we're one day into 2024 and we've already broken above 45. So now what I'm thinking and what I'm hoping for is that 45 now turns into that big support the same way that 40 played as a big support. So that's pretty much what we're going to be watching for here. We want to see price remain above 45 and see 45 really hold up as a big support level for us, where we can build positions and build long-term plays there. So that's what we're going to be watching for here over the next week or so. And as you guys know, we spoke about this a few months back, was this big bull flag that we had formed here, and then we had the breakout here. So with the breakout, that gave us a target of $50,000. And guess what, guys? We're almost at our target, which was our bull flag target of 50,000. So that's the chart pattern, because not only do I like to look at support and resistance, but I like to look for chart patterns, and that's currently the pattern that we've been watching here on the monthly time frame. So the next thing that we're going to look at is liquidity levels. So let's take a look for liquidity. We look at high block capital, and this kind of gives us an idea of where the liquidity is in the market. So why is liquidity important? Because price likes to go to where there's a lot of liquidity. So this is a heat map that we're currently looking at. The brighter colors, that's where there's the most amount of liquidity, right? We call these liquidity pools. And look at what happened here with as the price was moving around, it went up to that liquidity, right? Look how we just hit this today, right? This morning. So now that liquidity pool is gone, basically, right? We've taken it out. So where's the next biggest liquidity pool now at this point? It's down here, right? So we have to watch that, because that there is a scenario where price could potentially hit this liquidity pool. Now there's also scenarios where price is not going to go back down that far, right? And it's just going to continue going up. So that's one thing to keep in mind for now, right? As we watch this, as we watch the market, watch what happens. Can we go back down here, hit this liquidity pool? That's a scenario. We also have a liquidity pool at 35,000, right? But one thing you'll notice, as price moves up, these liquidity pools down here also move up with the price, because they need to catch up. So we had a few months back, we had liquidity pools still sitting at $23,000, $24,000, $25,000. So people were calling for Bitcoin's price to drop back down to those levels. And guess what? Bitcoin's price continued going up. It didn't care. So that's always something to keep in mind, right? It's not a end all. It's not a magic pill, right? You see here on the 3-month chart, we have liquidity down here at 33,000. If we go further back to 6 months, look at where the liquidity pools are. They're all the way down here at 23,000. So, but that's all slowly been moving up. So with time, that moves up. So now we're just focusing right now on the 1 month, and it gives us an idea of where those pools are. So let's I'm at the same time, while I'm doing this, I'm gonna be writing down, I'm basically writing my report for my Discord for those that don't get to watch this live stream or this video. So I'm gonna be, I already wrote down the beginning of this, but right now, let me see, did I write down liquidity? No, I haven't wrote it yet. So I'm gonna be writing this as we do this, as we go through this. So let me see. I'm gonna put it here for you guys so you guys could see as well what it is I'm looking at. So this is basically how I write down my reports. I do an analysis. I put monthly time frame. I have comments on it, right? Support and resistance. I basically break it down. Chart patterns, whatever. I break it down. You can see that I put not much has changed so far. Remember, we still have this bull flag breakout, which gives us a target above 50,000. And now we're gonna do liquidity levels. So this is from last week. So I'm just gonna replace this with my most recent analysis, which is what we just went over. And if we look, right, we just hit all the liquidity up here. We hit this liquidity pool at $45,000, which of course, if we look at last week's analysis of the liquidity levels, I said, and a whole bunch above $45,000. So I mentioned that level because that was a main level for that liquidity pool. So now this morning we finally hit our liquidity pool above 45K. So now for the downside, we still have big liquidity pool levels around the $40,000 area. So that's the main thing. Of course, we have some at 35, but 35 is not too important right now. I don't think that's the level that we get to in the next week. So that's the main two areas, right? Now further up, if we're looking, all right, so is there more liquidity to the upside? You can see here we have a small liquidity pool that's building up at around $48,000. So that's something else that I'm gonna add here because it's kind of important information, right? We have a new liquidity pool building up at $48,000. And the reason that's important to know is because that could potentially be the next target for Bitcoin's price. It could potentially be a resistance. So liquidity pools not only serve as potential targets, but they could be support and resistance levels as well. Because as you'll see a lot of times is as price gets close to that liquidity pool, or when it hits that liquidity pool, that begins to act as a resistance, and we could sometimes see price begin to pull back after that. So that's pretty much why I like to point out all these levels. You'll see that we also have a level way up here at 52. I don't think that's too important in the next 7 days, so I'm not gonna touch on it. But if we get any type of crazy move over the next few days throughout the week, then of course I'll update the group on that, and that's something that I have a mental note of. So the next thing that we're gonna look for are imbalances in the prices. So what exactly is an imbalance, right? So an imbalance, I like to look for them because an imbalance is when we have a candle like this where the price never retraced it, right? So a lot of times what you're gonna see, look at this massive candle. We had this massive rally here. It didn't really pull back on and retrace that candle, but look at this move. This one did. And now I'm not expecting a full retrace of this candle, but I'm usually expecting half, a 50% retrace. So when that doesn't happen, that's something to keep in mind because a lot of the times price likes to retrace big candles like this, at least 50%. So you can see here we had this massive candle. The next month it did like 25%. It didn't really do much, but the month after that, 2 months later, basically we hit that 50% retrace, and then price from there took off, right? And then we had this massive candle, and what happened here? 1, 2, 3 months later, we got the 50% retrace. 4, 5 months later, we got the full 100% retrace here before price continued up. So now, now this doesn't always happen, right? That just happens when there's consolidation, right? So that's something to think about. And sometimes it takes a long period of time to fill that imbalance. So you can see this candle here. This one filled 50%. So the 50% was hit. That would have been a good entry there for a short basically at that point. And then you can see eventually down the line, the price went all the way back and completely filled that candle. So you'll see that a lot, right? So right now we're looking for those same potential situations. And what we can see here is that this candle was never filled. This candle was never filled. This candle was never filled. And this candle is new, so we're not counting that one yet. So that's basically, and it actually started way down here. So that's 1, 2, 3, 4 months, 4 candles of imbalances basically. So those are what I call imbalances, when at least 50% of the candle isn't retraced, right? So that's the next thing that we're watching for here. And you can see that we have, if we're really looking at this, we basically have an imbalance. And again, I don't want to count the new candle, but we basically have this whole imbalance, which starts off all the way at $26,000 all the way to the current price, right? Now, what's 50% of this would probably put us around here. I would say around $34,000. Now, I don't think that we're gonna pull that back. It's not likely that we move all the way down, let's say $32,000, right, to follow that. And if we look back on history, we can see that when we've had began a bull run, like look at these candles. We had 1, 2, 3, 4, 5, 6 in a row without really getting a pullback. And we had these, so we had an imbalance here, imbalance here, imbalance on this one, imbalance on this one, imbalance on this one. Until this final one here, we didn't really get a pullback. So I'm not expecting all these imbalances to get filled. So I'm more looking at the most recent ones, right? So I'm looking at the most recent candles. So at this one right here, a 50% fill would put it around $40,000. So that becomes a potential scenario there, right? So let's see. Let's look at what we wrote on the report last week. So imbalances, massive imbalances over the last 3 months, leaving gaps all the way down to 25K basically. However, we have seen this before in the early bull run stages, so I don't really expect prices to drop that drastically to fill these. So that's exactly what we just spoke about. And because that's still relevant, I'm gonna continue to leave it in this report. 50% mark of the imbalance is around $34,000. And then what I'm gonna add to it is that last month's candle 50% fill would be at $40,000. So that's what we just looked at. All right, so next thing we're gonna look for now are wick fills. So wick fills are very, very similar to imbalances in the way I play them and the way I look at them. I'm looking for a big wick. And then the reason I like to look at wicks is because price likes to fill those wicks. It likes to return to those wicks and fill them just like the imbalances, right? So I always look at the 50% mark and then the 100% mark. In this case, you can see that this wick got instantly filled yesterday, basically, right? Over the last 2 days. So it not only filled the 50% mark, but it went above the 100% mark. So there's really no wicks here that we need to look for immediately. If we go down, we can see this wick pretty much got 50% filled. So really it's not anything there to be concerned about. This is the only wick that we really left down here, which the 50% mark would be around $21,000. Again, I don't see us revisiting that level, so I'm not really going to be looking at that. So what I'm gonna look for is, all right, to the upside, where are there wicks? And you can see up here, there's a wick here. So this wick was all the way up to 47,500. 50% is around 46, 40, yeah, around 46,700, around there. And we've almost reached, we're almost hitting that already. And then the next wicks are going to be all the way at all-time high. So we're not going to be looking at that yet. So, so in the report, I mean, basically exactly what we just said, right? Small wick from September, 50% at 25.5, 100% at 25. Don't think we see those again unless something goes very wrong. We have wicks to the upside at 48,000. The close of this month could potentially also leave a wick to the upside, and that's exactly what happened. It left a wick to the upside, and we already filled that wick instantly. So we could update this one. Once wick was instantly filled yesterday. No new wicks. All right, really don't need to write that. Just keep it like this. All right, so and then the last thing is trade entry. So really, when we're looking at the monthly time frame, we're not really looking at like day trades type of things. We're looking more at long-term entries. You can see that my report last month, long-term, any pullbacks from this range might be the final opportunity to get in at the cheapest price possible before the bull rally. 35K to 38K range is a good dollar cost averaging area. That's like the optimal area if we were to get a pullback that far, right? But it's looking less and less likely that we will ever get there. So I'm gonna change this from 35 to 38, and the high end I'm gonna probably put it around 42, because now I think now that's gonna be the optimal dollar cost average area for the long term, right? I don't think we're gonna get 35 to 38K. So now 38 to 42 is gonna be the new area that I'm looking for long term. For anyone looking for long-term entries, that'll probably be the spot I'm looking at. All right, so that's the trade entry. So that's the monthly time frame. That pretty much completes the monthly time frame there for us. The next thing we're gonna look at now, we're gonna do, because we're doing a top-down analysis, we're looking at the weekly time frame, right? So all we're doing is switching from monthly to weekly and doing the same exact thing. Now we're just gonna look at the same exact thing, except now it's gonna be like a different breakdown, right? We're basically zooming into the price. Timmers, what's going on, man? Appreciate you tuning in. I'm not looking at altcoins today. This live stream is solely focused on Bitcoin. So I won't be looking at that today, but I will be doing an altcoin analysis either tomorrow or the day after. So make sure to remind me and I'll take a look at that for you. But for today's video, we're strictly only looking at Bitcoin. We're only going to be analyzing Bitcoin and seeing where things are and where it could potentially be heading. So, all right. Weekly time frame here. First thing we're looking at, I like to just kind of get a overall view of where things are. You can see that we have this major trend, right? Major trending support here. You can see we have a smaller trending support and another smaller trending support. So we have three different trend supports here that we're taking a look at. You can see that we're at this big resistance, and looking back historically, now we see a little bit clearer how these levels played as resistance here. Look at that. That's like the perfect rejection there, right? We could also see how it was a support here. Look at support here again, right? Support here again. So that's why this is a major level, because all this price action that we had here historically in the past. So because of that, we're expecting something similar at these levels. So that's why this is a big level that we mark here on our charts. Now, as we zoom in, now we start looking, okay, where is the support? Where is the resistance? Right? So we have this trend line, we have this trend line, and then this trend line's way down here. We're not really too worried about this because this is just so far away. That sits at $31,000. That would probably be the worst case scenario in, let's say we had an event where FTX failed again for some reason. Then that's the only way I think this support would come into play. I don't see any reason why we would drop that low for any reason right now. So right now we'll be focused more on these two. Now these two, this support here is around 42,000, and this support is sitting at about $40,000. So two main levels that we spoke about on the last time frame, right? So let's see here. Let's look at last week's report. See what we were talking about. I love to look at last week's report and see what I wrote and see what our analysis gave us, right? So last week's report, the comments were, we closed out the week in green. Now we're starting to see a potential bull flag forming here on the weekly chart as we continue to consolidate in this range. So let's take a look at what happened. We can see clearly what I was talking about, right? We had a big move up, consolidated. This was last week's candle, green. Well, this is last week's candle that I spoke about in the report, which was green. Then the actual last week's candle ended up being red. We ended up down 1.7% on the week. But now this week's candle is up almost 7% already, which is potentially, we're potentially getting this breakout, right? So if we get this breakout here, we have to figure out, okay, where's our target with this bull flag breakout? So first, let's go back to our report. Last week, we closed red as continued to consolidate between, I think last week we're between what? The low was 41, the high was 43.8. So I mean, as we continue to consolidate, this week, this week Bitcoin has hit a new 2-year high of $46,000. I want to see Bitcoin hold here above the big $45,000 level, which could bring in a new range for us between 45K to 50K. So that's pretty much my thought process. Now with the breakouts above 45K, this is potentially the bull flag breakout we spoke about last week. So now what we got to do is measure this, right? So now we're like, all right, so if we get this breakout, how far can this breakout take us, right? Like, how far can this be? Now, the way that you measure and the way that you get a target from your breakout is you basically measure the previous move up from the bottom to the top, and then you put it at the breakout point. Right now, we could potentially, I'm trying to figure out if to put it from down here, because that would be a massive, but I'm thinking more around here, because this was kind of its own bull flag here, and then this was the breakout out of this bull flag. So I would say this is probably the spot. So now we're going to measure that, right? So I'm going to put it from this candle here to the top here, to the top of that range. Then we're going to grab it and put it at the breakout point, which is right around here, 44. And that gives us a target of about $52,000. So now we have a target, right? And this coincides with this, our monthly chart pattern, which was also a bull flag breakout, which gave us a target above $50,000. So now we have the monthly time frame, the monthly chart pattern giving us a breakout with a target above 50,000. Now we have also a weekly chart pattern giving us a bull flag breakout above $50,000 as well. With this breakout, we gives us a target of about 52K. All right, so those are my notes. I always like to do notes before going into the rest of it and really breaking it down. So that's just pretty much the overview, right? So now let's look at each, right? So let's start with support resistance. As you guys already know, we have the big resistance level here at between 45 all the way up to 48. We also have 50. So those are all going to be big resistance areas. So that's the first thing that we're going to note here on our report. See, before last week, 45,000 is a big resistance in this range. Next major level is, of course, 50K. Main support sits at 42K and 40K. I think we can see Bitcoin continue to consolidate between 40 and 45 until a catalyst can push us out of this range. So that was last week's report, right? And that's pretty much exactly what happened. We went down as low as 41,000, but 42 was able to hold. So that was where we were building long positions there last week. And 45 was, of course, the big resistance. So now we've broken above that. Now we're going to change this to 48 is the next big resistance in this range. The next major level is, of course, 50K, so we can leave that. That's fine. Main support. The main support now will potentially be 45K and 44K as well. If we lose those levels, then we could revisit the previous range supports of 42K and 40K, right? And then now we can change this. I think we can see Bitcoin build a new trading range if we hold above 45K. The new range will likely be between 45K to 48K with the potential for 50K as well. So that's pretty much where my mind's at right now, just from looking at that, at how things are developing there. So now chart pattern, we already took a look at it. So bull flag breakout if price holds above 45K. Let's see, weekly RSI is still overbought. Trend line sits at 40K now. Higher high, higher low trend lines at 30K. Now, one thing, let me see here. One thing that we are still seeing here is that we have this bearish divergence, right? You can see here, RSI setup went higher, price went higher, but now price just went higher and RSI went lower. So that's going to be important to note here as well. Bearish divergence between price and RSI. So the reason that's important is because when the price and RSI aren't in sync, a lot of times what we see is either a big consolidation period or a pullback. Now, the reason that I'm not super worried is because we have a big potential catalyst coming. And that catalyst is probably going to determine what's going to happen here, right? So if the approval goes through, these technicals don't matter. We can see price just run up. If the approval doesn't get approved, then we could potentially see these technicals play out, because we would get a pullback at that point, right? So that's pretty much what we're going to be watching here and how we're going to play that. So I like to note it there in the report. So the next thing that we're going to look at is liquidity levels here, and once again we're going back to high block capital. And this time we're going to look at the 7-day chart. So over the last week, basically. And we're going to look for liquidity pools here. So I'm going to do, let's see. So this is the price right now. We can see it. I like to zoom in a little bit. Gives me a better idea of where things are. So I'm going to kind of do something like this. And now it's a little bit more clear on Bitcoin's price and where it could potentially be, where those liquidity pools are, right? So we saw here that we took out all these liquidity pools. Remember, we spoke about that. Price likes to go to liquidity pools, and we can see that happen there. And now you can see that the biggest liquidity pool is to the downside. It's sitting at about $41,000 or just below 41,000. And then the biggest liquidity pools to the upside are above the current highs we set up this week. So they're going to be sitting above 46,000. You can see them all the way up to 47,000 basically. So those are going to be two levels that we're going to want to keep an eye on. We're going to want to watch because they are potential targets, right? So let's see, last week we said we just hit the big liquidity pool that was sitting at $42,000 today. Further downside liquidity pool below 40K. We have some upside liquidity pools at 45K. So that was last week's report, right? Now we can update this to where we currently are now, right? So we hit all the upside liquidity pools. We hit all the 45K liquidity pools. Further upside liquidity pools now sit above 46K. And then to the downside, liquidity pools, let's see, where were they to the downside? Around 41,000, right? And that pretty much covers everything we just looked at there. So next, let's move on to imbalances. All right, so you can see there's not really any immediate imbalances here over the last few weeks because we've been consolidating. So the most recent imbalance was this candle right here, which was the end of November, the beginning of December, right? That's when we had that big move up to 40,000 and beyond. So that's the biggest one we have. And you can see there's no other imbalances all the way back until October, when we had this imbalance here all the way down to 30K basically. So this was the big one that I don't think that we'll see again. But this is more immediate. And we can see the halfway mark on this one is around $39,000, right? So what we're gonna do, let's take a look at what we have here. We have an imbalance from 37K to 40K. 38.5K would be 50%. So we already have that written down and nothing's changed there. So we're just going to leave that as is. Wick fills, let's see, last week's wick was filled to the upside. Last week candle left a wick to the downside around 40.5K. 50% was at 41K. So if we look at last week's candle, which was, we're talking about this week right here. Let's see. We said 50% was around 41K and we didn't hit it. So we still have that one there. And then we're also going to have this wick to the downside here. That's around, it's going to be around 41.8K, it looks like. So we're going to make note of all of those, right? So we're already filled. We already filled last week's wick to the upside. Last week's candle left a wick to the downside, 50% mark. The 50% mark, where was it? 41.8. And then we still have the wick to the downside from 2 weeks ago, where the 50% was at 41K. All right, so and then once at trades, again, we're not really looking for trades here on the weekly time frame. This it's similar to the monthly time frame. We're only looking for areas to dollar cost average for long-term investments. So I'm not gonna do anything there because you could just use the one that we just did for the monthly time frame. So that pretty much wraps up the monthly and weekly time frames, and then it leaves us with the final one, which is the daily time frame, right? So once we move into the daily time frame, a lot of things start to change a bit, and we're basically zooming into the price and really breaking it down, right? So now here is where we can look for day trades. If we want to look for day trades, if we want to look for swing trades, anything of that nature, this is where we're going to be doing it in the daily time frame and below. Now we're only doing the analysis until the daily time frame, but if you want to go below that, you can do a breakdown similarly to what we've shown you so far, and do it on your own to find other potential trade setups. All right, so let's jump into this one. Let's see what we had last week. I like to always look at. Oh no, what did I just do? Just stay there. That's it. All right. So, let me see here. Oh, crypto, ow. said, thanks for sharing wisdom. The Nightbot deleted the message because he used all caps. But appreciate that, man. All right, so on the daily time frame, let's go ahead and take a look here. So last week, at support and resistance, we saw we have strong resistance at 45K. We can see 44.2K has been where most rejections have been happening on the daily. Major support sits around 42 and 40K. You can see we also have a trend line at 42K, currently holding up the recent pullback. And current range is between 40 to 45K with potential mini range between 40 and 42K as well. So now looking at this a week later, we can see that we've broken that. Well, we can see first of all that the trend line held, right? This is a trend line we're talking about, and this trend line held perfectly to perfection. So we had that. Now we had to move up above the resistance that we just spoke about in last week's report, right? So even though that you see that currently we're just below 45K, this level here was a big resistance. So that's about 44.2. So I expect that to be potentially a support level here now for the price. So as long as we close above this level, I expect this level to hold there. And I wouldn't mind potentially opening long positions there around 44.2K. So that's something that we'll talk about when we start looking for trade setups. All right, so let's see. And you can see that this is also basically a bull flag, right? And this bull flag would have the same target because we started from the same area here, basically. So let's first off, let's start with the support and resistance. So we broke above the big resistance at 45K. I want to see price hold above 45K or 44.2K to confirm them as the new support / bottom of the new potential trading range, right? Now, major support is gonna sit at 44.2K and potentially 45K with, of course, further support at 42 and 40. Now, looking at the trend line support, that is now still at 42. It's a little above 42, but basically still at 42, right? So you can see we also have trend line support at 42. At 42K, so pretty much leave that because that's still relevant. Current range, so this changes here. New trading range. If we hold above 44.2K, this could be the bottom of the new trading range up to 48K. All right, so that's basically what we're watching there as far as support and resistance. Now, chart pattern. So last week I said daily RSI is finally back in neutral, out of oversold territory. If we look at it now, we're still in neutral, so that's still good. Daily RSI. So I'm gonna delete it because it don't really doesn't really mean anything for us right now. The symmetrical triangle pattern broke out to the upside last week, but was rejected at resistance. So this is basically what I was talking about. It broke to the upside. It was a symmetrical triangle, and we got rejected up here to resistance. Came back down to this trend line, and that held up. So what we're going to put here is bull flag breakout gives us a target above 50K, just like in the weekly and monthly. Let's see, anything else that we need here? That's pretty much it for now. We do have this potential bearish pin bar here at resistance. So, but because the patterns, the day's not done, the pattern's not done, so I don't really want to put it in here. So I'm gonna leave that out for now. Okay, so here's another good one that I put last week. Potential patterns setting up here are double top and head and shoulders. So let's look for those patterns here on the chart right now. So the double top was this here and this, right? So we got rejected, and we got rejected again at the same spot, which was giving us that double top feeling. However, if we break above it and, you know, and run up, then we don't have to worry about that. That'll be out of play. However, also, if for some reason here we get rejected once again, and we move back down and we start consolidating down, what's going to happen? We're going to have left shoulder, head, and potential right shoulder, which would be a head and shoulders pattern. Head and shoulders pattern is a bearish pattern, which could send price probably further down to either around here. Let me see, where would the neckline be? Neckline would be around here. So it could potentially send us further down, right? So now there isn't, the pattern doesn't exist yet, but it's something to keep in mind depending how this plays out here. Because this would be the right shoulder forming here over the next few days. So we got to see what happens here. Hopefully that pattern doesn't form, right? So we're going to leave this potential pattern setting up we're going to leave this these two notes there, so for chart patterns. So now let's look onto liquidation levels. So we come back to high block. Now we're going to look at the 12-hour. This is the smallest time frame they offer. And we're going to zoom in. And this is going to be the most immediate liquidity pulls. And you can see the most immediate liquidity pulls right now are to the upside. They're at basically $46,000. Right? We have some liquidity down here, but the major one, the most immediate one right now is in that range. So let's take a look here at liquidity levels, what we said last week. We have liquidity pulls to the upside at 42.5K right now and 43.3. So we already know we hit those. We also have liquidity pulls to the downside around 41.1K. And last week, we basically hit those as well. Let me see, we went down last week as low as 41.2. So we got very, very close to those liquidity pulls from last week's report. We hit the upside ones, and we basically hit the downside ones as well. So now this week, the upside at 46K. And that is currently the biggest liquidity pull. To the downside, it currently sits. We have some at 44.4. And the biggest one is basically 44, right? So I'm going to just put 44K. All right. Imbalances, going back to the chart, we had a massive imbalance from yesterday. So we can add that to our report here, and let's look at last week. You see no big imbalances to note here. Everything has been filled in the current range. Where the imbalances lie are to the downside, where we broke out of what we mentioned in the previous time frames. So we can get rid of that one, and then this one we can put massive imbalance from yesterday's move, right? So 50% mark, which is a target, it's usually one of the levels we target, is around 43.3K. 43.3K, 100%. So in the event that it filled the entire thing, 100% would be about 42.3K. All right, so we have the imbalances. Now let's look for any wicks. So right now we have a major wick forming here to the upside, and to the downside we have these small little wicks here. This wick got filled on this one. This wick didn't get filled. That one is around 50%, is around 42. This wick also never got filled, around 41K. Let's look at last week's report on the wicks. We have some small wicks to the downside with today's candle. They're all pretty small wicks. Here, we will have to see how today's candle closes and potentially keep an eye on. All right, so basically the wicks that we just spoke about. Small wicks to the downside. And we said 50% was around 41. 50%. 41.8K. Then we have this wick here that hasn't been filled. Another wick to the downside, 50% at about 41K. Today's candle is potentially leaving a big wick to the upside with the 50% mark at around 45.5. So that becomes a potential target for another move up, not today per se, but throughout the week. So now let's move on to trades. So trades that we're looking at, trades that we could potentially be taking, right? So last week's trades, the first play we're watching is a long at 42K retest. This is where we currently are. I like longs here for both scalps and swings. And if we look back at how those worked out, you can see that 42K was able to hold here, and we had this massive move up. So that was a successful trade from last week's report. If we go lower, then I'd probably set, if we go lower, then I'd probably look to set up long positions anywhere under 41K. So this one we didn't get. We almost got it, but we didn't get. And then, of course, I signal anything that, any personal trades that I take myself. So, so the first play we're going to be watching is a 44.2K retest. This is going to be for a long, right? We're only looking at longs, really. If we, another play that I like, that we spoke about, also like potential plays here at the 45K range if price closes the daily above it. Right, so that's basically a break and retest entry. So again, long. And were there any other setups that we looked at? So I think the other setup is breakout above 46K. So during bull markets, we like to trade breakouts. So that's 3 different setups there. We have the 45K. If it closes above 45K, I like longs here. If not, if we get a retest of this 44.2K, I like to take longs there. If not, if price just goes up, then I like to take a long above $46,000. And that's basically the setup for this week, I think. I think those are the 3 trades that I will mainly be looking for. And that pretty much concludes our weekly report. So this is exactly what we do every single week. As on Mondays or Tuesdays, I create this report. I basically go through I do a Bitcoin analysis where I go through everything, basically, right? Everything's coming up this week, any events, anything on the economic calendar. We look at the dollar index. Then we do a top-down analysis of Bitcoin, starting with the monthly time frame, looking at all sorts of different things, and going down to the weekly time frame, going down to the daily time frame, and then finally using all that information, all that data, all that the entire analysis that we just did, using that to formulate a plan for the week, a trading plan for the week. And that's how we build up these trading plans. And that's how we consistently stay profitable and consistent with winning trades. In 2023, I can show you guys now my win rates for 2023. So let me put this up on the chart. So this is 2023. This is how we ended. We ended up taking a total of 107 trades for a profit loss of about 154%. So if you started with $10,000, it would have been around $15,422, right? Winning trades, we had 72 winning trades. We had 35 losing trades. Our win rate was about 67.29%. Our average win was about $309. Average loss about $196. Average win about 30%. Average loss about 19%. Our risk reward ratio, our average was about 1.5. So you always want to have this at minimum 1-to-1 ratio. So we're way above that. We're at 1.5. So that's why we were able to perform so well last year. Our largest win was $1,250. Our largest loss was $866. Expectancy in each trade is to make about $272. And then this is our average hit rate of each of our targets. So we always set up 3 targets. Target 1, we hit it at the best rate, of course, 67.29%. Target 2, we hit it at about 50%, or 47.66%. And target 3 at about 28.04%. So that's basically how we ended up performing last year. And you could also take a look here at Algo. Now, Algo, we began running it in December, right? So we've only been tracking it through December as far as this information that we have here. And you can see how it did. It performed very well. You can see the last 1, 2, 3, 4, 5 trades of the year were all wins. And now this is going to be giving you a lot of trades. You can see it did 110 trades. Oh, you guys are still looking at my face, aren't you? Whoops. There we go. Sorry about that, guys. You can see I'll go really quickly. Let me show you once again my personal trades of 2023 here, because you guys were looking at my face. You can see 154%, 72 winning trades, 35 losing trades, 67% win rate, right? Now in algo, remember, this is an algorithm that were formulated over the last 2 years or so. And basically what it does is scans the market for trades in altcoins that you probably otherwise wouldn't find. And if the rules are met that it's looking for, it creates a trading plan based on the last 50 times that the same setup showed up. So you can see that it hit 100. It did 110 trades, 170%. Now, this is max profit loss. So this means if you nailed the perfect top every single time, right? That's likely not the case. So you should be somewhere in the middle, I would say. If it says 170%, you're most likely, if you were able to catch every single trade, you most likely ended around what? You could have been around 80%, maybe 85. I mean, if you did anything above 20% on the month, like, that's amazing, right? So if the max profit loss was 170 and you did, let's say, 20% of your portfolio, that's incredible. 20% in a month is crazy. This is showing max profit 170. I think you could probably be somewhere in between that. Total winning trades 92, total losing trades 18, which gives us a win rate of 83%, guys. 83%. Now, this is doing a 1-to-1 risk to reward ratio, right? At 83%, which at 50%, if you were doing 1-to-1 with a win rate of 50%, you would basically be break even. So 1-to-1 at 83% means you're very profitable. Now you can see the average win was 229, average loss 227, and average win percentage 66, average win loss 63. So everything's about even, right? The largest win $525, largest loss $355, expectancy $229 per trade, and then you can see how it hits its trades here. I don't know why this one is showing 82. It should be at 83. The target 1 and win rate should be the same, so I'm not sure why this is showing lower, but it's about 83%. Target 2, it hits it at about 70%, and target 3 hits it at about 56%. And then once you get down to the lower you go, the further targets out you go, of course, the lower the hit rate. So we can see 44% at 4, 34% at target 5. But that's how the algo performed last month. Now, I'm not going to go into options because I haven't updated it. When we last looked, we were at, we did like $5,000 in income, in passive income in November, and we were at about $1,100 in December. Now, in December, when we had that crazy run up, we actually went negative because we had covered calls that went into the negative, basically. So I believe that we ended up December going just barely negative because we had to roll back those positions into January. So I'm expecting January to be very, very positive, basically, because those positions are already in lots and lots of profit. So we're basically at about break even from December. Now this is not updated, but this is basically where we were. So win rate, we hit 20 winning trades in a row basically here, and we lost probably like 3 throughout the month that we had to. And when I say lose, it's a loss because we had to roll it back. But once you roll back the options, you make back that money. It covers any losses basically. So once I update this, then I'll show you guys more. But yeah, that's basically a recap of 2023, how we did in our trading room. As you guys know, or if you don't know, now in 2023, we introduced a bunch of new products and features in our Discord. We used to only do the leverage signals that I would share my personal signals, but now we created the bot and that's now available. We also have the option signals, and we have algorithm alerts that alerts you of different movements within the market. and we have some indicators that we're introducing as well. So a lot of cool new features that we're putting up now in our Discord. If you guys are interested, we're giving away 7-day free trials. So you don't have to pay anything. You can try it out for 7 days. If you don't like it, just cancel, and that's it. You don't pay not a penny. But I'm so confident in what we're putting together here and what we're offering in our services, in the quality, that I'm willing to give you guys a 7-day free trial. That's how confident I am. I will give you an entire week for free. If you guys don't like it, cancel. You don't pay me anything. If you do like it and you want to continue, then you just continue on with it, right? So you guys can check it out. Let me see if I can pull up the page here. Give me a second. Where'd it go? It like disappeared. I don't know where it went. So I just grabbed it and it disappeared. All right, let me see if I could open it up here. Here it is. So this is a website, wap.com/Bitcoin-daily. And you know, we offer all sorts of stuff. So depending what your price point is, we have a price for you. Whether, you know, if you want to pay on the lower side, then I recommend leverage signals, $50 a month. If you want option signals, that's $100, or algo signals, $100 a month. If you want access to everything, right, then $250 a month. And as you can see, you get a 7-day free trial, however you decide to join it. So check that out, guys. Like I said, we're killing it in the trade room right now. And you're probably on my face again, aren't you? Yep. So I just showed you the website and you guys are on my face. So here's the website. If you guys are interested in any of those features. Yeah, Giannis, sorry about that, Giannis. I keep doing it because when I switch the page, I forget, and when I switch to my face, I start talking, then I remember I want to show you guys something, and I forget that I switched to my face. So sorry about that. But yeah, that's pretty much it, guys. That's pretty much everything that I wanted to cover today. We've been live for an hour and a half. I'm starving, haven't had lunch. It's about 3 p.m. Here where I live in the afternoon. So I'm off to go eat. I hope you enjoyed this, guys. Let me know if you guys like this type of breakdown. I might be doing this more often for you guys. I do this every single week in the Discord. So this is something else. When you join the Discord service, we do this every single week, right? So if you're interested in seeing more of this, we do it every week on Discord. I think we might put together a newsletter. I'm trying to do so much new things in 2024. I'm super excited because I know the potential of crypto this year, and I'm trying to not only position my brand and myself, my business, to take full advantage, but I want to position you guys, the guys that have been following me over the last few years, to put you at an advantage to make as much money as possible during this next run up, because crypto literally can be life-changing. The amount of money that you can make in crypto could be life-changing. It was for me. I was able to retire from what I used to do back in 2017. I was doing real estate. I was a realtor basically at that point, and I was doing real estate, and I was a day trader until I got into Bitcoin and crypto. Like, that's when things took off. Like, it was like that changed my life. I think it could do the same for you guys. And I started out with about $1,000. So if it worked out for me, I think it could have the same effect on you guys. So that's why I'm so passionate. That's why I do so much. And that's why I put so much work and time into this. So appreciate you guys. Everyone that tuned in, everyone that was in the chat, Rivers, Giannis, Crypto Al, and everybody else that tuned in. Thank you guys so much. Happy New Year's. Wishing you guys the best, and I'll see you guys on the next one. I will do another live stream this week, either tomorrow or Thursday, and do a breakdown of the altcoins. So I'll see you guys there. Until then, peace and love.